Good day, YouTube. This is J Money with Falling Forward Financial. Happy Saturday, happy weekend, and getting ready to go out and party. So I couldn't resist making a video or two. I have this one and a new MJ REIT that I'll be doing next, so you'll want to watch that one as well. So, but this is investing $20,000 in these 5 stocks could give you $6,000 in annual income. So. Not too bad. So if you want to put a 0 behind that, you just take that times 10. So, and there you'd have it. So, or whatever you want your income to be, you'd have to pull your calculator out. But making your money work for you, that's good advice for any investor. I've went over quite a few dividend stocks here, REITs and other things here on the channel. Dividend stocks provide an excellent way to put your money to work, especially with certain stocks. Investing $20,000 in each of these 5 stocks could give you roughly $6,000. So I'm already increasing it, $6,000 in annual income. So to put $20,000 in each, so $100,000, and then you'd have $6,000 in income. So if you had $1 million, that'd give you a $60,000 income. So not too bad. So start saving those pennies. First is AbbVie. I've talked about them once or twice here on the channel. They're a pretty decent dividend payer, a juicy dividend. I've used that term before, juicy, especially on a Saturday night. And reliability offers them both. Ticker ABBV. The big pharma company's dividend currently yields 3.9%. A $20,000 investment would generate around $780 in annual income. AbbVie is also a dividend aristocrat. Don't worry about the pending loss of patent exclusivity in the United States for AbbVie's top-selling drug, Humira. Next year, the company should be in a great position to quickly offset any revenue declines thanks to a strong product lineup. Next is Devon Energy. I haven't heard of this one. I've heard of a couple other energy companies. They're not coming to mind right now. This ticker is DVN for Devon. Offers a twist with the dividend. I forgot to say about AbbVie, not only are you getting the 3.9, but it also appreciates, which is kind of nice. So not only do you have the appreciation of the stock, but the nice dividend as well. Probably the same thing with all of these. So this is an oil and gas producer. It says a fixed dividend plus a variable dividend that's based on its excess free cash flow. Devon projects a dividend yield in the ballpark of 8%. That's enough to give you $1,600 in annual income with an initial $20,000 investment. But you can count on Devon's dividend in 2022 since part of it is variable. I think so, especially since gas prices are going up. So, as the CEO stated in the recent fourth quarter conference call, that the company is in strong position to grow its free cash flow by more than 70% this year with the current market dynamics in play for the oil and gas industry. The goals seem quite attainable. Next is Enterprise Products Partners. Strength for oil and gas markets should also work for Enterprise Products Partners, EPD. Advantage, it's a leading midstream energy company that operates pipelines for transporting and storing crude oil, natural gas liquids, and petrochemicals. A $20,000 investment would provide $1,550 in annual income based on Enterprise's current dividend yield of 7.75, so that's a pretty healthy one. The actual total could bring higher. Enterprise Products Partners has increased its dividend distribution for 23 consecutive years, so it's getting close to being an aristocrat. Look for the impressive streak to continue in 2022. So, next is Medical Properties Trust. You can add another $1,080 in yearly income by investing $20,000 into Medical Properties Trust. ticker MPW, the dividend yield for the Healthcare Real Estate Investment Trust. So this one is a REIT. Currently stands at 5.42%. Some healthcare REITs have seen their dividend payouts decrease in recent years. MPT, though, boasts 9 consecutive years of dividend growth, with its solid portfolio of 440 hospital facilities in 2022 shaping up to be another good year. So the chances for another dividend hike appear to be pretty high. Next is Verizon Communications. I have some Verizon. My bigger holding is in AT&T. You can comment with whatever comments you want about AT&T, but it's got a fat dividend as well. So the annual income from the previous 4 stock adds up to at least $5,010. Verizon, ticker VZ, offers a dividend yield of 4.8. Buying $20,000 in the telecom stock would add another $960 in income and bringing the total to $5,970. Even nominal dividend increases from a couple of these 5 stocks should bump your yearly income to more than $6,000. And there's also reasons to buy Verizon stock. I've talked about it quite a few times since it is 5G. In particular, the increased availability of 5G networks across the United States should serve as a tremendous tailwind. I look for Verizon to make inroads into the home internet market as a result. The stock is also cheap and shares trading at only 9.8 times expected earnings. So there you have it. Verizon, VZ, Medical Properties Trust, MPW, Enterprise Products Partners, EPD, Devon Energy, DVN, and AbbVie, ABBV. So you can put in the comments if you have any of those or all of them, or which is your favorite, or if you have another favorite dividend play, communications, pharmaceutical, or an oil and gas dividend payer. So, but that's all that I have for this one. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.